Good evening and welcome to the Papyrus Global TV Africa Business News. I am Christiana Babayu, and tonight we take an in-depth look at the economic forces, financial decisions and market movements shaping Africa's business landscape. From currency pressures and inflation to foreign investments, infrastructure financing, trade policy and the rise of Africa's digital economy. These are the developments influencing governments, investors and households across the continent. Here are the top Africa business stories this evening. African economies face renewed currency and inflation pressures as central banks tighten policy. Foreign investors show cautious re-engagement in energy, mining and agriculture across Africa. Governments intensify debt restructuring talks with multilateral lenders and private creditors. Infrastructure, digital services, and Fintech continue to drive long-term growth expectations. In now the news in details. Currency stability remains a major concern across Africa. In Nigeria, the Naira experienced fluctuations this week across both official and parallel markets. The Central Bank of Nigeria, led by Governor Olayemi Cardoso, reaffirmed its commitment to exchange rate transparency and market-driven reforms. CBN officials say recent interventions are aimed at clearing foreign exchange backlogs and restoring confidence among exporters and foreign portfolio investors. In Ghana, the cedi remains under pressure despite support from the International Monetary Fund, while Kenya's shilling has shown modest stability following aggressive interest rate hikes by the Central Bank of Kenya, headed by Governor Kamau Tuge. Economists warn that currency volatility continues to affect import costs, inflation, and business planning across the continent. Rising inflation continues to reshape Africa's business environment. In South Africa, Statistics South Africa reports that food and transport costs remain key drivers of inflation, affecting household spending and retail performance. In Egypt, currency adjustments and subsidy reforms have pushed up production costs, prompting manufacturers to review pricing and output levels. Small and medium-scale enterprises across Nigeria, Kenya, Ghana, and Senegal report that high energy costs, logistic challenges, and interest rates are squeezing profit margins. Business associations across the continent are urging governments to balance macroeconomic reforms with targeted support for productive sectors. Despite global uncertainty, Africa is seeing renewed but cautious foreign investor interests. In Nigeria, the Nigerian Investment Promotion Commission, led by Executive Secretary Aisha Rimi, confirmed increased inquiries from investors in agriculture, renewable energy, manufacturing, and solid minerals. In Ghana and Zambia, foreign firms are revisiting opportunities in gold, lithium, and copper, driven by global demand for energy transition minerals. Morocco continues to affect European markets in automotive manufacturing and renewable energy, while Kenya remains a hub for technology and digital services investment in East Africa. However, analysts stress that converting interest into actual capital inflows depends on policy stability, infrastructure, and security conditions. Energy remains central to Africa's economic growth. In Nigeria, power sector reforms are ongoing as manufacturers call for improved electricity reliability. The Manufacturers Association of Nigeria, through its Director General, Shegun Ajayi Kadir, says energy costs continue to undermine competitiveness. In South Africa, state utility ESCOM continues restructuring efforts amid power shortages, while private investment in renewable energy projects accelerates. Countries including Kenya, Egypt, and Namibia are attracting funding for solar, wind, and green hydrogen projects, positioning Africa as a key player in the global energy transition. Africa's banking sector remains resilient but cautious. Major banks in Nigeria, South Africa, and Kenya reported stable earnings this quarter, supported by higher interest outcome. Analysts at Standard Bank Group, EcoBank Transnational Incorporated, and Access Holdings say regional banks are strengthening capital buffers while managing credit risk. However, high interest rates are slowing loan growth, particularly for SMEs. Public debt remains a critical issue. Countries including Ghana, Zambia, Ethiopia, and Kenya continue negotiations with the IMF, World Bank, and private creditors. Finance ministers across Africa emphasize the need for debt relief, concessional financing, and fair global financial reforms to support development. Africa's digital economy remains a bright spot. Fintech companies in Nigeria, Kenya, Egypt, and South Africa continue to attract venture capital despite global funding slowdowns. Mobile payments, digital lending, and cross border remittances are expanding financial inclusion for millions. Tech leaders say supportive regulation and infrastructure investments will be key to sustaining growth. The African Continental Free Trade Area (AfCFTA) continues to reshape trade discussions. Officials at the AfCFTA Secretariat in Accra, led by Secretary General Wamkele Mene, says progress is being made on customs harmonization and trade facilitation. Manufacturers across Africa say improved transport infrastructure and reduced tariffs could unlock regional supply chains. Agriculture remains Africa's largest employer. Governments in Nigeria, Ethiopia, Tanzania, and Cote d'Ivoire are promoting agribusiness value chains to boost exports and food security. However, climate shocks and financing gaps continue to challenge farmers. Those are the major business stories shaping Africa this evening, from monetary policy and foreign investment to energy, trade, and digital innovation. Africa's business landscape reflects both pressure and promise. For more analysis and updates, visit thepapyrusdaily.com. I am Christiana Babayu, and you've been watching the Papyrus Global TV Africa Business News. Good night, and thank you for staying with Papyrus Global TV.